Welcome, everybody, to another episode of the Stock Medic. I'm Courtney Thomas.
And I'm the Everyday Dozier with Humble Poison Pie Investing.
Kadeem, right?
Yes.
You were here the last time you were here. Right?
About a week or two ago.
Right. We talked about AMC.
One of my favorites.
Which you did well on. And then we went over some basics on setting up your stock chart. And reading the indicators. Right?
I've got all that set up now, my MACD, my 20-day moving average, and I'm ready.
You ready to go? So today, we're going to go into how to apply that to buying an option or a stock right after the intro. Welcome, everybody, to another episode of the Stock Medic. I'm Courtney Thomas.
And I'm Kadeem Thomas, the Everyday Dozier.
So the last time you were here, we went over setting up your stock charts, how to set up your parameters, oscillators, indicators, right?
Yep.
And how to read them. We talked about your AMC trade.
Yeah, some AMC stocks I bought and some calls that did pretty well. And then now we're got the whole stock chart set up.
Okay.
Now there's just a few things that we're still trying to, learn for the future, for better calls.
Right. And not to make that Tesla move where you were buying the top.
Yeah, exactly.
That never feels good when you buy the top.
No.
You want to be able to recognize resistance. You want to be able to recognize tops, double bottoms, right? So these are where you get your opportunities to buy or sell, or sell and buy, right? Depends on what you're doing.
Exactly.
Correct.
So how do we do that?
Well, let's start off with your AMC play, because I don't think the AMC play is over. And we have that chart pulled up. You can see on Friday it went up 15% again. But you can tell here, and I'll put on the inspect so everybody can see it. You can tell right here where it broke out. 1282. Where it broke out, went all the way up to $72. I mean, you had calls in here. You had calls at $40.
At 40, I was able to get out at 65.
Right.
I was thinking about buying the top. I didn't.
You did not, because you learned from the last class that we did.
Exactly.
Right? Do not buy the top. Wait. Right. Because since then, what we're seeing here at 72 is resistance. The stock goes there. And it gets rejected.
It's been rejecting hard.
And it's been rejected 5 times now. But at the same time, what's good here is that the moving averages are moving up. The 20-day moving average is moving up. The 21-day moving average is moving up.
The higher lows.
To making higher lows. And the 100-day moving average is also moving up. So interesting, right? What's going to happen when the moving averages and the price meets?
Oh, there's still a whole lot to come with that.
Right? I think there's more to come with this AMC trade. Too much for me right now. I'm looking from it. But I think there's more to it. We'll get back to that. We'll keep an eye on that.
So yeah, with AMC and the squeeze and all that, we'll have to get into that in another video. But for now, we're just going to get into a few things you got for us today.
Well, we're going to do a basic candlestick chart. Just the basic candlestick, right?
And that's these things here that are like green and red and all that.
Right. They could be different colors. Right.
Red's bad. I just know red.
Usually red. Usually red means down. Unless you're buying puts or shorting the stock, red's good.
Okay.
Right. So red's not always bad.
Okay. It all depends.
All depends. But typically red's down. Green or black or white would be up. Typically, right?
All right, then.
So this is a basic candlestick chart pattern. It has 4 points. It has the high point. Okay. As you can see here, it has the open point. As you can see right here.
Where we started off the day.
Right, where it starts the day. And you have the close. And then you have the low point.
So it closed lower than it started.
So this one actually opened higher, closed lower.
I see. Wow.
So this would be then a bearish candle. Typically it's going to be red.
This is where I would have sold up top, hopefully.
Right. You put it together with a couple of other indicators, and it might have told you this is where to get.
I see.
Right? So along with that, this one on the other side, the color is different, but it opened at the low.
Okay.
Okay. Closed at a higher price, but it actually went higher than that.
This is what we would call bullish.
This would be a bullish candle. And typically the bullish candles are green.
Mm-hmm.
Typically, or white. When they're white and it covers this whole body, because this is a candle, but the whole thing you'd call the body of the candle.
Mm-hmm.
If you can get it that covers the very bottom of this wick to the very top of this wick, it usually is a ignition candle.
That means things are going up?
That means things are going, or down, because if it's red, you can have an ignition candle to the downside.
I see.
Right?
Okay.
So it's just basic candlestick charting. Once you learn the basics, then you can put them in patterns.
Mm-hmm. So like we were saying, like I still holding and hodling my AMC, my Doge, my Tesla, but I've got a few extra bucks here that I'm trying to spend. And so I'd like to figure out what would show me a good place to enter into a new stock, or where should I put my money next for another option? Because I love making risky option calls.
I know you do. I know you do. Well, options are good because they limit your risk. If you put 200 into it, that's all you can lose.
Yeah, exactly.
But a lot of time the upside is pretty big. Mm-hmm. So options are okay. It just does a small part of your portfolio. Right?
Exactly. Just a small part. Don't YOLO the whole thing.
Yeah, don't do YOLO the whole portfolio. Don't do that. There are at least 10 chart patterns that every trader should know.
Yeah, okay.
We can't go over all 10 now, right?
Mm-hmm.
Obviously. But we're going to go over a few of them.
Okay.
And these will help you, right, in kind of identifying, the next stock, right, when you see it.
So what's the biggest one here that will show me if I see this happening, we've got money on the way?
Well, we should probably look at a double bottom.
A double bottom.
Okay. And double bottom usually is where the stock comes down, right?
It's dipping.
And buyers comes in, they buy it, push it back up.
Okay.
The sellers come back in, they sell it.
Taking profits.
And they take it back down, usually to about the same point that they took it back to before.
I see these.
Right? You can see that here, at bottom here, and another bottom here. So this gives you two bottoms.
I see.
So this gives you a place to trade off.
Okay, it's a foundation.
It gives you a foundation. Okay. If it falls below that, that's not a true bottom. Or else it wouldn't be a double bottom. Okay. But if it then goes from the double bottom into more bullish candles, and you see these green candles here, these ignition candles, there's one right next to it, and that would be a bullish engulfing candle, because you have the red candle next to it, and then you have this large green-bodied candle just ate it up.
I see. They sold a bunch, but then we bought it right back up.
And more.
So
that's a good pattern to look for, the double bottom. It's a strong bullish indicator.
All right, any others in here?
Yeah, and we'll go over a couple more. So that's the double bottom. And then we look at a rounded bottom. Okay. And I see this one right now.
Okay.
I see this in the stock, so we will talk about the stock.
Okay,
so
I'd like to hear that.
Rounded bottom. And what you see here is that, it comes down, right? Comes down. And then it makes a spot like this large red candle here.
Yeah. So that's where they start selling.
They sold that day. They sold hard that day.
But still.
But at the end of the day, they weren't able to keep it all the way down. You can see at the very bottom, the tail of this large red candle. You can see that the bulls then come back in and they buy it.
And buy it up we do.
Right? Because it's been sold off. Right? So they came in, bought, pushed it back up. So you can tell that the bears are in a little bit of trouble here. Because it's a constant battle between the bulls and the bears. Right? Yeah. And every day they're going to fight. And this particular day, even though it looks like the bears won, the bulls are about to take over the next here. Because what you notice next is that a green candle shows up. It's a small green doji, but it's still a green candle. And it closed above the low of that previous day. Okay. Yeah. And then it continued out the rounding part of it here. Even though you see this large red candle,
That's some more dip right there.
Right, but it opened lower and actually closed higher, even though it shows that it's red.
So that's not even a dip.
No, this is more bullish activity.
I see.
Okay, because it closed higher than the previous low. So the bull continues to run. The bulls are winning here.
So that was some good red then. I like that red.
Right. So the color can change. It's the direction that you're usually looking for, right?
Okay.
And you can see the round in here. And the thing about that I like about this pattern is that it gives you many chances to buy it, right? 20 shares, 20 shares, 20 shares, 100 shares, 50 shares, and you build 100, 200, 300, 400, 500, 1,000 share position because this thing gives you a lot of time.
You know what? I think I have seen that pattern coming up pretty recently.
Right? It gives you a lot of time. And then the third one we can do is the cup and handle, because the rounding pattern usually leads into the cup and handle.
Okay, then.
And the breakout.
So it started to go down, but it got bought back up. And now we're getting into a new pattern.
We're getting to a new pattern that is most likely going to go higher, and that's usually have the breakout. And the breakout is a whole other trade.
And so what do you call this pattern?
So this one would be your cup and handle.
Okay.
Right? So as you can see, we had our rounding pattern here, and then it kind of trended down within, your 2 points here. Right? Trended down.
More kind of consolidated in that little
consolidated
pattern.
to the downside a little bit. It never went lower than the moving averages.
Yep, I see.
This is key, right? And then you can tell here, bullish candle comes in. The next day, even though it's a red candle, that Firefly Doji,
he's firing up.
It's still higher than the previous day's close. Okay? And you can tell that this candle went all the way down and closed near the high of the day. And the very next day, you have a bullish candle, a green candle. This thing's ready to go. Now we can buy calls. We can buy options on it. We can buy more stocks and let this thing run.
That all sounds exciting to me.
Yes.
So where are we seeing that right now in the stock market?
I'm seeing that in Airbnb. Thanks again for watching another episode of The Stock Medic. I'm Courtney Thomas. Don't forget to like, subscribe, hitting the notification bell so you will be informed as soon as we drop another video. Also, if you're interested in investing in crypto, hit the links below. Thanks again for watching.
And remember to stay humble, stay informed, and get yourself a bigger slice of that pie.
Have a good evening.